Hey everyone, we're back. This is our third version of these types of live debates that we're having on Twitter. We've gotten really good feedback from the last two, so we're keeping them going. And so keep your feedback coming, and we'll just continue to improve the format and the topics as well. So for those of you who don't know me, my name is Preeti Kasreddy. I'm the founder and CEO of True Story, and we're building a platform where we can have civilized debates about claims like the one we're having, like the one we're about to have today. And the reason I'm doing this, honestly, is because in the process of building this company, one of the things I've realized is that it's really important to have healthy conversations about claims, regardless of how controversial or not they are. And especially when they're controversial, people have tended to be very open-minded rather than open and transparent. So I'm really trying to get this industry to move from a let's argue about this controversial claim attitude to let's explore this idea together attitude. And rather than just talking about what feels right, like talking about like both sides of the argument and really exploring the topic deeply so that we can really figure out the truth together. And so today's topic really is just something that came up from Nathaniel's, he tweeted something last week that I found interesting where he was like, people don't want to be their own bank, discuss. And a bunch of people jumped into that thread and started to provide their own feedback of why or why not someone would want to be their own bank. And I found that conversation very interesting. So I asked Nathaniel to come on and see if he'd be open to talking about both sides of the argument of why someone would want to be their own bank or not. And so before we even jump in, I'm going to set some context for this. So what does it even mean for people to be their own bank? From my understanding, this is a narrative that goes around a lot in the crypto world. And so the idea that you want to be your own bank is that you can manage your own private keys. And so you don't have to rely on a central party like a bank to manage your money, to manage your funds, to manage your wealth. Instead, you can manage everything yourself because you own the private keys. And so this is supposed to give you all this sovereignty and this freedom to not have to be reliant on a central party. And this is the narrative that goes around a lot in the crypto space of why we should be excited about crypto. And the reality is we were trying to figure out, do people actually want to be their own bank? Do people want to have ownership over their keys? Do people even want to have that responsibility? And the answer is not clear yet because I think people fall on both sides. And there's good arguments for why someone would want to be their own bank or why someone would not want to be their own bank. Personally, I'll play the devil's advocate and I'll say I've definitely met people who look at crypto from the outside and they're like, why would I use this, right? Like, for example, in America, the financial systems, the credit card systems, payment systems work really well that trying to move into a crypto, Bitcoin or Ethereum or any other cryptocurrency world seems like you're stepping back in time rather than forward in time. And so for a lot of people, they're like, why would I go through this pain of holding my keys and going through this really slow, cumbersome process of using crypto when I can just use existing services or banks? Another instance I had was I visited Finland last year, and one of the interesting insights I got from that trip was like in the Finnish like financial economy and the financial payment rails and everything, they do a really good job of building that up, and people trust the system. People like the system. They find it very convenient, and they can't think of a better way to do it. So they trust the banks and they use the financial system without any there's no problem that they have with it. So they look at crypto sometimes and they're like, what problem does this really solve for me? Because it's not faster, it's not cheaper, it's not better. So why would I want to be my own bank? And so these are kind of some of the criticisms that people have given around crypto of, give me a reason for why this even matters. And so, Nathaniel, I'll let you kind of start talking about what you discovered when you dug into whether people actually want to be their own bank or not.
Yeah, this is awesome. So thanks so much for having me. I was super stoked when you reached out because, so two things. One, I share your strong interest in making crypto safe to have like big kind of explosive, crazy conversations. So I think this is a super cool format. And that's actually kind of the spirit that the question was offered in. So I think the exact phrasing was something like, when I tweeted this out, it was a totally random, like errant tweet. It's just something that I happened to be thinking about. And I think I said something like, But the problem is a lot of people don't want to be their own banks. Discuss. And like I had no expectation. I thought a couple people would jump in, but it ended up being like one of actually like my most engaged with tweets like ever. And so clearly there's a lot of interest in this, and I think there's a lot of reasons for that. But the interesting thing is that to some extent, I wasn't coming at it from one side or another. I was genuinely thinking about it. It's a phrase that has become routinely used, as an idea, kind of a slogan almost in terms of in crypto. But the question is kind of what it means. And so, when I like sent this out, the responses started coming in really quickly, and we were kind of reflecting on it, and it's almost worth breaking apart into, I think, looking at this question of, do people want to be their own banks, or this phrase, be your own bank, from kind of three angles. So the first is a consumer demand question, right? Taking this at face value. Do people want to be their own banks? That was kind of the original spirit of the question. And so I think that's like a good starting point, and something we can dig into. A second angle, though, is the kind of larger market impact of the possibility of consumers being their own banks. So something that came up very quickly was the idea that not everyone has to be their own bank for it to have a meaningful impact on the market and change the nature and the behavior of the existing financial system. So that feels to me a little bit different a question than consumer demand to be your own bank in the first place. And I think it's worth looking at from that angle. And then a third piece, and this is obviously for those who follow me at all know I spend a lot of time thinking about narratives and communication. There's a third question is be your own bank an effective marketing slogan, for lack of a better word? Does it attract people to crypto, to Bitcoin? And if so, who? And if not, why not? And kind of what is it, basically how effective is it on that front? And I think that's really interesting. So maybe we would kind of dive in to both some of our thoughts and just what we saw in the responses to this, kind of in that order.
Yeah.
So the first question, the consumer demand. One side, I could have argued this conversation as well, was on the one side, there's the convenience for people who have like good, robust, convenient, banking infrastructure. It seems like kind of a high burden, or there's a higher threshold of why you would want to replace that with something. On the other hand, are people who are dealing with less infrastructure or more burdensome infrastructure, or whatever it is, where you prioritize the control, the sovereignty, the liberty that comes with kind of being your own bank. And so a couple of things that happened really fast when we posted this question. One is a number of people really quickly brought up the question of what do we actually mean when we're saying be your own bank? And are we talking about bank-like functions and bank-like services, or are we talking about custody of assets? Because that's a really big different thing, right? And so there were a number of people, I think this is probably the thing.
Can I pause you? How are they different? Can you break that down? Why are they different?
Yeah, absolutely. So when some people hear be your own bank, I think actually most people, this is certainly what was in my head, when they hear be your own bank, I think they think like be totally responsible for your own assets, right? Like you don't have to outsource the responsibility of managing where your money lives and where it's preserved and how it's kept safe to a third party. You do that for yourself, right? It's basically like, instead of keeping your money under the mattress, you keep it somewhere. And so I think that in crypto in particular, the be your own bank is closely related for a lot of people to the idea of not your keys, not your coins, right? And this idea of custodying your assets. And I think actually, in fact, that when I was posting that, and certainly this is just me, but when I was posting that, the part that I was responding to by suggesting that there's some meaningful portion of people who don't want to do that is about the concern about like losing your keys, or just the responsibility that comes with self-custodying big amounts of assets.
Yeah.
And this is something I guess even for more context, it probably came out of a conversation where I had been I'd spent a bunch of time with a kind of a family relative, a family member who hadn't gotten exposure to Bitcoin, who really wanted to make like a meaningful jump into it after spending a bunch of time kind of with me and some other folks who had gotten into it. But for them, it was a prerequisite that they had some custodial solution that was not just, a hardware wallet, or, like them having to remember their own keys. It was like, they were like, I mean, and partially this was kind of like the world that they came from, but it was really important to them that they did not, that they had a solution for that. So one of the things that people pointed out really quickly though, on this thread, is that when we say be your own bank, there's a lot of other things that might mean, right? So one other kind of thing that people drew out was, are we talking about kind of central banks, or like your kind of local, bank where you keep your money, right? Because part of being your own bank, for some people, what that conveys is not having the debasement of money from inflation, right? It's more kind of fundamental. And so that's a perspective where I think, the argument is that, of course, most people would not want their money to get less valuable over time. So in that sense, be your own bank becomes valuable. But another thing that people brought up is kind of like bank-like functions. So the ability to transfer money, instantly, cheaply, to whomever you want, whenever you want, without control. The ability to withdraw as much money as you want at any given time, right? Like, so there's a set of functions that are not just custodying assets that banks provide for people, that having more granular control over is really appealing to people. And so I would say that kind of the first big theme that emerged from the comments is that there's a difference. There's a set of functions that are bank-like that lots of people might like to have more control over. And maybe the question is, what is our relationship with wanting to custody assets? And I thought it was interesting, actually, because a couple days later, Bruce Fenton actually tweeted out something similar, where I think he said, like, controversial opinion, like most people are not going to want to custody their own assets. So he was kind of he was being a little bit more, less of the kind of the question of the marketing slogan and more just the actual meat of the issue. And it created a similar kind of large conversation. So yeah, let me pause there. I think that's like the kind of one big takeaway from this is, it seems to me that there's going to be a major question around custody of assets and whether people are comfortable with self-custody.
So, is it fair to say that if you separated consumer demand into two things, one is custody of assets and the other is like bank-like functions.
Yeah.
Is it fair to say that custody of assets is more akin to like maybe a store of value type thing, where like what kind of how do you want to store your assets, and how do you want to store your value? And then the bank-like functions is more like, how do you want to use your value, like the utility part of the money?
I would say the only thing that I would say to qualify that, I think it's a good general distinction, but maybe not store of value. I don't think the controversy comes up there. That's actually what people were making the point in terms of saying that like most people are not going to want their currency, their value to be debased. I think that the bigger question is the keep safe. Like how does my money kept safe? But I think you're right. So that how is my money kept safe is one bucket, and then how can I use it, and how easily can I use it, and how much freedom do I have to use it is a different function.
So I guess like I can understand the first part, the custody of the assets, because I think a big narrative around crypto is banks are bad, governments are bad, they inflate currency, and so you want more control over that. But the second part about not being able to move your funds around and stuff like that, like where have you seen that be a problem?
Well, so this is so this gets into, I think, the second really important part of the conversation that came up very quickly after when this was posted, and still in this consumer demand perspective. There is potentially, I guess I would say, a massively different set of perspectives on this based on where people are based and what their local experience and what the financial system looks like where they are, right? So there are big parts of the world where it is not the Finland payment rails, and it's not even kind of like the US system, but like basic financial services are extremely, difficult to use, right? And so for that creates a whole different dynamic. A second piece is basically how activist are central banks or kind of government institutions that have control over banks in terms of determining controls, right? So like there are, I mean, for example, there are withdrawal limits in the US that you can kind of work around and things like that. But they're pretty big and people are used to them.
Yeah.
One of the things that's come up, I've seen a couple times over the last year, call it, is speculation or worry or fear about when withdrawal limits might be changed, right? So an example recently that didn't really amount to anything, but is worth noting, is as the Yellow Vest protests were getting kind of big in Paris, there was talk about a bank run, trying to do a bank run in France, and like there's almost no chance. This is definitely kind of like at best going to be a media thing. And really the question is like, how do you get it? Because there's no chance if you actually run the numbers, like for them to really disrupt the system, even with the number of people they had involved. However, what was interesting is that there was some talk about how strict the limits were on withdrawals and how it made it so it was nearly impossible. And so the interesting thing is like those systems, originally came out of, and the reason, at least the good reason for withdrawal limits, is to prevent things like bank runs or help to prevent things like bank runs. So it's actually the system functioning as it was designed.
Yeah.
The problem is that like when that sort of like and this is a perspective, but like if and when that stops serving the needs of people. So another example that is interesting, and I don't actually even want to I'm not qualified to say how people responded to this, but the state bank in India last fall reduced the ATM limits from something like, I think, 40,000 rupees to 20,000 rupees.
Yeah.
And it actually seems like so we were kind of like tweeting out about this to get people's perspective in other places because this came up so quickly. And actually, I think one person was like, well, here's what's bad about the kind of Indian approach, but here's what's good too. It's convenient in this way. And so it's like, even those things are not strictly good or bad, but they are areas where if you want more control over, like, I think 20,000 rupees is like a little under $300, right? So it's like, for probably the vast majority of people, that's not going to be an issue. However, if it is, like, it becomes a really big issue really fast.
Yeah, like I think like it's interesting because I understand, like I think, and being in the crypto world, we think we can save the world with all these types of edge cases, but I wonder actually how many of these edge cases there really are, and whether that is really a problem, or more that like the systems are in place to, for example, like in India, the reason these limits exist is because the black markets in India are just like ridiculous.
Mm-hmm.
And so that's why there's the whole demonetization, and like they basically, everyone ended up moving to Paytm because like black markets. And so like, how many of these edge cases really exist for us to argue that this use case of bank-like functions being important to people are gonna drive consumer demand?
Well, and so way to have the perfect segue to this sort of second big bucket, I think, of the conversation, which is, what does it mean for the entire market of financial services to have competition from this kind of alternative system that's like less controllable? So this, I would say, is probably actually probably the largest response out of anything in this conversation was people who were quickly kind of jumped on and said, the point isn't that everyone has to be their own bank, is that for the first time they can choose to, and they can opt out, and the costs of exiting the established bank system are so greatly reduced with this set of tools that so that was kind of part one. And then by implication, the argument was that creates a new pressure for the existing financial system to behave better, right? Because they have competition.
Yeah, no, I actually, this is what I loved about your thread, because I found that part the most fascinating. That, like, I'd argue one of the biggest use cases or success metrics for crypto today is the threat of crypto itself.
Mm-hmm.
And I think like some of the people were arguing in your thread was the fact that this is even possible puts a check on banks and governments and regulators that like, look, like if you don't give people what they want, they'll go get what they want.
Yeah. So I think this is also the kind of the most fascinating part, is what happens when what happens when you turn things that weren't formerly markets into markets that have competition, right? So like I think this is the interesting question just around kind of crypto in general. Like what happens when there is a non-sovereign money that is competing with sovereign monies? It's no longer just like whether the US petrodollar is the reserve currency of the world, or whether kind of, the like something from some other place, other government becomes more valuable for whatever reason. It's this thing that is like kind of like uncontrollable that's competing with it. And that's a really new dynamic. And I don't think any of us, there's not enough time has transpired for any of us to really know how that's going to play out. However, I do think it's really interesting to look at where these examples matter. And so I want to go back actually to kind of a point that you were making about the temptation that we have in crypto, and certainly I feel this a lot, to maybe overemphasize how transformative it is now in places that are dealing with unstable monetary regimes and unstable political regimes, versus its potential. Like something that I feel really strong about, and we were talking a little bit before, my background is actually all in like failed states and post-conflict regions, and that's what I thought I was going to spend my life on. And to me, it's incredibly important that we're able to simultaneously understand that like crypto isn't a panacea, because nothing is a panacea, for these types of issues that are complex political, social, economic, issues all wrapped up together. But the fact of their existence and the way that they are being used is something to be excited about simultaneously. And we actually don't need to overstate how powerful they are to appreciate like just how transformative it is. And I think the conversation around Venezuela is actually a really good case in point for this, right?
Yes, absolutely. And I'll let you, but this is, go ahead.
So I think that like, the over exuberant Venezuela argument is basically that it's like the savior of the whole thing, or it's like going to become a Bitcoin nation, or all these things, like, which are just transparently and obviously not true. It can't possibly solve it. And it's like, this is a state that is fighting desperately against failed state status. And like, you have to appreciate how hard, and like, it's on the edge. Like it has a chance to recover, but it's like, it's fallen so far, and we can get into why and yada, yada, yada. But I think that it's like, it is, even without overstating how much impact Bitcoin has had there yet, the fact that there are numerous people like who are members of our community who we've seen, and others who are not members of our community who've been doing it silently, who have been able to use Bitcoin as a way to move resources out when you can't interact with your bank accounts from outside the country, and actually go use Bitcoins to get dollars back to their families, and do these things like if 10 people were able to do that in this situation, that is 10 more people than ever had that sort of opportunity using other means in previous situations. And that's still actually remarkable. And so, I don't necessarily think that like, that doesn't, to me, convey that like all of a sudden governments or central banks or other types of retail banks will start behaving better because of the competition. But it certainly validates that this set of financial tools that are permissionless and not controllable in the same way, they do create new opportunities for people to exert agency, even in really challenging situations. And I think that's really powerful. So that's kind of like the extreme case of what we're talking about. But I think it's really interesting to think about this does the possibility of being your own bank actually create pressure in the system and create new opportunities for people?
Yeah, exactly. And like, I think what you were slightly alluding to is like, basically it gives people the opportunity to exit if they want to. It gives them the option, where before the optionality never even existed. But I think it's important to distinguish that from the idea that like, Bitcoin is going to save Venezuela. Like those are very two different narratives. And I think sometimes the crypto space tends to go with the latter, because like I'd argue like the crypto space is still trying to find product market fit of like, what is this actually useful for? Where is it going to be useful, etc. So like the narrative around the fact that like, oh, it's going to save Venezuela, and that's like our back of the envelope answer. I don't think that's a good narrative to push either, because I've definitely met people in that area who claim that like actually very few people actually know about Bitcoin. The people who do are like in the minority, and it's because they sought it out and they're online and they're technical and they can figure it out. But most people just don't even know that it exists. So Don't you like the takeaway I had was like crypto people should stop using Venezuela as their narrative.
hmm So I think, so yeah, I mean, we could go way deep on this, but I think that what's interesting about crypto, and I think is like the great paradox and what makes it so fucking cool, frankly,
Yeah.
excuse my language, is that like it is the most, it is simultaneously the most idealistic and the most cynical community of people like in the world,
Yeah.
right? Like
Yeah.
on the one hand, there is, and I think this is true, like a base level. I think that the like commonly shared across almost every kind of tribe within crypto is this sense that the world is going to get kind of more complex and more chaotic before it gets less so, and that this set of kind of permissionless censorship resistant technologies are a hedge against that, like that chaos. And now people vary wildly on how chaotic they think it's going to become, and kind of like how bad they think it's going to get. But I do think that there's kind of a commonly shared sense that we're kind of like strap in because modernity is going to be nuts. At the same time, like, and there's a bit of a cynicism there. At the same time, like, it is so insanely idealistic to actually believe in like the trajectories that we all believe in about these sort of things that are totally disruptive in a way that I mean, there just really are very few parallels, if any, in recent history of what it would mean to actually have like something like a non-sovereign money compete for all these functions around the world. Like that's insane. And then obviously people are interested in dozens of other use cases as well that have similar profiles in terms of like changing the power flows that exist. So I don't know. I always find that it's a really interesting tension between this like gut level kind of skepticism, cynicism, like, nervousness, like hairy eyeballness towards the world, plus this like very like, you really have to be sort of idealistic and have some amount of belief to be in this. Otherwise, you kind of like, it's just crazy. So I think that like, but to your point, I think that where, it's very easy for things to get kind of caught up in that narrative and veer to one of those extremes.
Yeah, exactly. And then I want to kind of dive a little bit deeper into the optionality stuff that we just brought up. And there was an interesting response to to your tweet where someone said, um, like, it's the same thing as voting, where like even if there's the option, not everyone will do it. What did you think about that kind of feedback?
Well, so I think two things. I saw that one too. I feel like I don't know if voting is exactly the right parallel, because I do think that I think in general, I mean, this is kind of like a political science argument all of a sudden, but I think that voting is like more like participation in kind of I don't know. Voting is like a key kind of functional participation in a societal kind of construct, whereas like being your own bank or deciding to participate in that, like it's almost more like a where you place your emphasis on trade-offs, and what your like how privileged your situation it is in terms of where you can decide to put your place, in terms of trade-offs. So I mean, I think that the idea of it being an option and it not needing to kind of be for everyone is true. I just don't know how much I'd connect that to kind of like voting parallels.
Yeah.
Um, I guess I will say that, and maybe this is kind of a dimension that we haven't gotten into that much. Like, I think that so I guess one other part of the response has to do with like, well, what portion of people don't want to be their own bank because what it means to do so now is too complicated from like a user experience perspective,
Yeah.
and will as like these kind of like basically zero interface kind of user experiences come online, right? Like what happens when there's the market for kind of self custody of assets is not just like, write your private keys down on a piece of paper and put it in a vault, or alternatively like leave it on Coinbase, but there's like a full set of things in the middle that like every piece of that market is addressed in some way. And I mean, you're already starting to see that like flesh out as companies kind of build now all these different types of solution. And my guess is that what you'll probably see is kind of the disambiguation of banks, right? And the
Yeah.
kind of the deconstruction into a bank stack and there'll be different types of experiences. So like if you're a person who's really concerned with your ability to move money around because of the nature of the business that you run, like you could really avail yourself of that set of functions. But there is a kind of a semi self-custody type option, that's like, I don't know, whatever. Like, I don't want to make stuff up, but you know that there's going to be kind of a market for every different type of custody because it's such a valuable service that people provide. And so I do think that you'll probably start to see like basically the choice to participate in being your own bank won't also be as binary as we're making it. It will be, there'll be like this full spectrum and market options, and people will kind of select their stack and their parameters to really custom meet their needs, which I think if that were to happen, that would be a really good outcome.
Yeah, no, I know, and it reminds me of like similar trends in history of this type of thing happening, where the option and the technology enabled much better user experiences. And one thing that comes to mind to me personally is like access to information. So like before, it was like the media controlled all the information that you saw, and so like you didn't. The only way for you to consume alternate views and opinions was to go seek it out and be like a minority. But now, because of social networks, like there's a disintermediation of the media, where like you can get access to any type of information and any type of viewpoints without seeming like an outcast per se. So like I think like it in the end, like I think this technology will be good because, as people have pointed out, it forces everyone to, it kind of puts checks and balances on everyone that didn't exist for a long time.
Yeah. Yeah, exactly. So, okay, so let's actually talk for a couple minutes, if you're up for it, about this like third piece of like how effective is this as a marketing, like as an appeal to people, right? Like, does this attract an audience? Because I think that to some extent, like part of the like, let me put it this way, this comes up. I think that the be your own bank idea comes up like, okay, so as opposed to something like not your keys, not your coins, that's like an Andreas like warning. That's like a reminder. That's an educational thing. That's not meant to like attract people to the space, right? Like that's not a marketing type slogan. Be your own bank has often been offered as like, it should be exciting to you to be your own bank. And that's, I think, kind of what I was responding to.
Yeah.
And other people have as well, this idea of like, well, who is that appealing to, and who is it going to attract? And I would say that more often than not, the responses who kind of were looking at the question from that angle were really like basically did not think it's a particularly good way to attract new audiences, right? Like there were a couple kind of strong comments that I think one person said it was like the worst slogan that Bitcoin had ever had, which I thought was really interesting. So I guess before I get into my thought, what do you think about that? Like I mean, well, one, is it even a marketing slogan, or is that just the wrong way to think about it?
Yeah,
And then two, like, is it effective?
Yeah, to be honest, like I think it is one of the worst slogans ever, because reality is most people don't want to do their own things. They want other people
Yeah.
to do the things for them. So it's
Yeah.
like, why would you sell something as if like, here's more work for you to do. You can be your own thing. So like, I think I think it goes against human nature of not wanting to do it. So I agree with that person, but I do think it does appeal to a minority of people though who do want that. You know what I mean? Like some people don't want to trust other people to do their thing, so they will manage their own servers, or they'll manage their own blog, or whatever it is. So it appeals to a certain set of people who care about that ownership and that sovereignty. So I don't think it's a mass marketing. I don't think it's a good mass marketing slogan, but it does appeal to a minority.
So I think I think that's dead on. I actually agree completely. And for me, like when I was thinking through that actually brought up this interesting question of like, okay, so one fascinating thing about Bitcoin, I think, like Bitcoin specifically, and why we're all so interested in it, is that it's not a company. It doesn't have a leader. It doesn't have like even kind of like semi-formal leaders, really. It is this thing which all of us are entitled to. And so when it comes to things like marketing slogans, it's just like random people trying things out that stick, right? And you have like, constantly this crew of people like in the brain space and in the Twitter sphere who are honestly like experimenting with ways ways to kind of like seeing what sticks in terms of what messages appeal. Like I wouldn't be surprised if 20 years from now there's a class on like Pomp and Dan Held and like Misser, like all these guys, and what their tweets were like saying about like conveying the sentiments, and how like some graduate thesis will definitely be like ranking like Bitcoin booster posts based on like their engagement and stuff, like because it's just, we're all just experimenting. And so I think though that, like, to your point, people seem to have, like, it really feels like it's not mass market. And I think that you're right too, that it's actually has less to do with even the question of like, it's less the word your own bank, and it's more like your own anything. I think that you're right. Like people like, I mean, our whole world has been structured around like economies of convenience, and so I think that you're right there. But so it brought up for me though, like this question of like, at this stage in this industry's life, like, are we supposed to be trying for mass adoption, or are we not? And if not, like, who are we trying to appeal to? Because I think that there's at least a pretty cogent argument that, like, getting the people, like creating this strong base of people who really do like want control and sovereignty over their money, over their wealth, over, how they get to use their money. And like they provide a lot of really important functions for a money system, which is emergent and really reliant on belief and long-term faith and like reductions in volatility. And so it may be that actually, like, appealing to that set of people who are the most inclined to index for control over convenience creates the space and the time, really, for there to be lots of experiments to find product market fit for the wider world, right? Like, it's much better for people in other places, in other financial regimes, and other kind of monetary situations, whether it's Venezuela or something that's just like, I mean, Argentina's, I think, in some ways is even more interesting than Venezuela to me, because Venezuela has, hyperinflation, but Argentina had, like, I think 42 or 45% inflation this last year, but it still has a highly functioning economy too. Like, that's a really interesting combination of factors to see. Like, I don't think it's an accident that you have like a big core of people working on MakerDAO down there, and you've got so I think that, like, rather than trying to like force these like uses onto people, or even like control the narrative too much, or like be desperate for people to adopt things from a payment situation, to create a situation where kind of like the financial system, the money system, is backstopped by this set of people who really want that control and who are going to hold on to their assets kind of at all costs, while the market figures out where these things are actually valuable, and maybe that's like an over optimistic or over even free markety kind of way of looking at it. But it just strikes me that, like, it's hard to imagine this set of technologies and kind of financial technology sure resonates and addresses like the need of people who want sovereignty over their financial stack.
Yeah, and this brings me to an interesting point, which is that, like, I think you like the best technologies don't get forced upon people. They kind of just get integrated into people's lives. And you saw that with AI, for example. Like, people don't use AI consciously. It's not like I'm looking for my next AI solution. I mean, there was like a trend for a couple of years where like everyone was building AI startups, but then people realized AI is a feature and not a product. And so I think, like, I envision that the mainstream adoption will happen, but it'll just happen like underneath us. And I don't think the consumer wants to think about whether they're being their own bank or they're not being their own bank. I think, like, it'll just be in the background almost.
Well, I think like, we do actually kind of have, we can almost cross-check that. The emergency CPs, basically like like they're like taking asset that you have, this deposition, something you have your own thing. It's use the bank for, like, a line of credit, but just kind of done, algorithmically, basically. And how many of, I mean, this actually maybe a follow-up question that we put out to Twitter, like how many people who are opening CDPs and experimenting with that, like, well, one, are they actually doing, like, using it because they want that money? They're just experimenting, which would be totally fine. But two, for those people who are actually like using a financial tool, are they considering themselves like, are they like, oh, this is awesome, I can do my own do anything they want to do. Now, it's almost like they to kind of bring together this set of functions as like maybe we're like burdening this new space unduly with like the way that things were constructed in the past by roping it all together as like a bank, rather than it just being this set of things that you can do that solve different issues for you. That was one thing that came up a couple times, was like the one problem with the phrase is that there's like baggage about what a bank is, right? And actually someone just tweeted as we were talking, there's nothing resembling banks on the Bitcoin network. Just stop already. You aren't being your own bank, and nothing like. And actually, I don't think you can start. I think it's literally just like, it's an example to me of like this, like as soon as we start referring to things with the old language, we're kind of like almost like keeping ourselves constrained to the way that we look at it.
Oh, that's a really beautiful point. And I think that like almost deserves another conversation of are we trying to shove this into our existing mental models instead of being more open-minded about it and seeing what possibilities arise? But since it's been 45 minutes, I do want to kind of try to close it off there. But I want to summarize a little bit and say that, like, I think Nathaniel did a really good job of kind of breaking down the argument about whether people want to be their own banks into three things. He talked about consumer demand, and consumer demand breaks down into two things. One is like, do people want to be their own bank, like meaning like own their own keys, custody, or do they want to have the freedom to have bank-like functions? So that all falls into the consumer demand piece of the question. And the second part is like, maybe the be your own bank narrative is not about consumer demand, but more about the impact of the possibility of being able to be your own bank, meaning like it puts checks and balances on banks and systems, so that because now they know that you have the other option. And then the third thing that we talked about was like the be your own bank slogan. Is it an effective marketing slogan or not? And we kind of talked about like whether it's effective for the mass market and or the minority. And so for those of you who enjoyed it, just rewatch the video, and we'll share the Twitter link. But if you have follow-up questions, we'll definitely be answering them in the Twitter thread. So just follow up with questions there to Nathaniel or myself, and then we can continue the conversation on Twitter. But thanks for joining us, Nathaniel. It was awesome to have you on.
Yeah, this is great. I appreciate being here, and we'll keep talking about this question. I don't think we solved it.